Every week, I hear somebody saying that they're waiting to move forward with buying a home once the rates drop. And it makes sense because we are so focused on the interest rate, since that is a huge factor in what you'll actually pay per month to buy the home. The thing is that's not the full picture. And if you're only focused on your timing being tied to what the interest rates are doing, and my fear is that you might miss out on an opportunity to get a great home at a great price if you're waiting just for rates to drop. If we haven't met, I'm Rebecca Richardson, aka the Mortgage Mentor. And what I do on my channel is take my years of experience, share that knowledge with you so you can make informed, confident decisions when it comes to your home and your mortgage. Now, when it comes to interest rates, it's not that rates can't drop. There's certainly the market influences that would lead to interest rates improving. But at the same time, we're not going to see what rates were in 2020 and 2021. So if that is the benchmark for where rates need to be to feel like they are reasonable, then one, you're setting yourself up for unrealistic expectations, because hopefully we're not going to have a situation where the market supports rates being that low, and have been for, kind of the average has been around 5s and 6s for years and years. We see spikes and we see drops, but for the most part, somewhere in that range is considered a normal market. But the thing that I worry about if people are focused solely on the interest rate for deciding when to move is, again, that's not the full picture. That's not the full market picture of what's going to happen. Most people focus on having a lower interest rate because it's going to lower their payment and they're going to pay less for the house. They picture locking in that rate, saving hundreds of dollars, and really finally feeling like you beat the market. You've had the right timing. The thing is when rates drop, home prices and buyer demand tends to go up fast. And that's because interest rates do affect affordability. And so for people that have been watching the market and trying to wait to move, just like you, if they're watching interest rates and basing their decision based off of what rates are doing, then you're going to have that influx of buyers into the market. That then means that there is more demand for limited supply. What happens is sellers aren't as likely to offer any kind of buyer incentives in terms of closing cost, or maybe doing a temporary buy down to, help lower the interest rate. It might even mean that you get into the situation where there's a bidding war and you're driving the price of the home up, sometimes even over list price. And we're right back in the same dynamic that we had in 2020 and 2021 when people were paying $20,000, $30,000, $40,000 over the list price just to get the house. So even though the rate was lower, the cost to buy wasn't. The important thing to remember about that is then you're not just dealing with interest rates. You're not just competing against interest rates. You're really competing with other people to get your home under contract. So let's put some real numbers to it. Let's say that you're buying a home at around $450,000. You lock in at a 7% rate, and that means that your monthly payment is going to be around $3,000 a month. Now, imagine that you wait 6 months and rates have fallen to 5.5%. It sounds great, right? But now there's a lot more demand. Sellers know that they can get more for the house, and now you're paying $480 for the house. Now, your payment would drop, right? It's probably going to save you a couple hundred, maybe $100 a month in the payment. So yes, you are getting a lower price per month, but you're paying $30,000 more for the house. And you probably had less room to negotiate because you were competing with other people, or you didn't have the seller pay your closing costs for you, or all the other things that can be negotiated beyond just the price of the home. So lower rate, higher price, it's not exactly the win that people think it is. There's also the hidden cost of waiting. While you're waiting, two things are happening. One, home prices are going up. Now, are they going up as much as they did a couple years ago? No. Are some markets seeing some decreases? Yes, because there's not as much demand. Again, that will shift when rates shift. But for the most part, over time, homes do appreciate. And you're also missing out on the opportunity to build equity and to get the benefit from homes appreciating and being worth more by going ahead and buying now versus waiting for kind of that magical X factor day when rates are lower. And for example of this, I have a client recently that reached out for a refinance because they had locked a little bit over 7%. We were able to save them some money. And just looking at the appreciation of their home from 18 months ago to now in a market that's been a little bit more balanced, it hasn't been a runaway market, but they already had $20,000 in equity. So the people who bought when the market didn't feel right, or it might have been, a little bit more of a, I wish rates were lower, but the math works. We love the house. We love, where it is. We want to move forward. They have been able to build equity while the people that have been sitting on the fence are still waiting. Because really, when we think about buying a home and totally understand investing in real estate and Airbnbs and investment properties and all those kind of things, and the ability for even just owning your primary home to generate wealth for you, it's more than just looking at the cold hard numbers. And that means that it's also, as far as if you buy sooner, it's not necessarily about chasing a deal. It's more about having time on your side, time owning the home, stabilizing what your housing payment is going to be, building up the equity, establishing a home for you, for your family, the memories, all of that kind of stuff. That is more than just the math around the mortgage. And don't get me wrong, I love the math, but I'm just saying that there is a bigger picture than just one number or just a couple of numbers. And the important thing is that although we don't have a crystal ball, I wish I did, but although we don't have a crystal ball to know exactly when rates will improve, you can refinance later on. Most loan types, you're going to have the mortgage for at least 6 months, and then you can refinance. You don't have to have it for years and years and years. There are ways to make the refinance very cost effective with minimal out-of-pocket cost or minimum net cost. But what you can't do is go back and buy the home at last year's prices. You can always refinance the interest rate, but you can't refinance a house that you haven't bought. So the biggest takeaway that I have for you is that perfect conditions rarely exist in real estate. It is so very much a personal decision about when the right time to buy is. And it is way more than just what the interest rates are doing. If the numbers work for you today, if it works for your budget, then it's the right decision. It's the right timing. It is a personal decision. That's because you want to make the decision to buy a home based off of your life and based off of your budget, not what the news is saying, not what they're saying on social media, what is right for you and your money. Because the truth is, the market doesn't wait for anyone, and it is always shifting. The market is always good for some people, bad for some people, challenging for some people, easy for some people. You just have to understand what your individual goals are and then how to work with the current market to put yourself in a good position to lock in what you can lock in now, the home price, and make sure that the payment is comfortable to afford, or maybe even, again, in this market where we are seeing opportunities for buyers to get some concessions from sellers, have them pay their closing costs, or even do a temporary buy down to give them some payment and rate relief for the first couple of years. There are lots of options out there that we can make it a win. It's more than just the rate that you get. If it makes sense now, move forward and reach out with any questions. But waiting for perfect conditions can wind up being the most expensive option of all.